is Sheila Arthur. His favorite website is HassleFreeCashflowInvesting.com.
So we're going to look at leverage as a term, as a ratio, okay? So there's a really cool trick formula that I'm going to teach you, and even if you've been investing for your whole life, I think it's highly likely that you've not learned this formula, and so hang in there, and you're going to be excited about what you're about to learn. So let's say it's a $100,000 property, and you've got, so here's the property, and here's the financing, and here's the cash invested. And so if you put zero financing and $100,000 of cash, that's no leverage, it's 1 part your money to 1 part property, and we call this 1-to-1 leverage. 1-to-1 leverage in hassle-free cash flow investing is not a good thing, right? Because you're only making money on your money, and a fundamental teaching of hassle-free cash flow investing is making money on other people's money, specifically the money from the bank, because the bank has the cheapest interest rates out there. If you could go borrow money from your IRA and that was cheap money, well, that could make sense, or your 401k rather, or you could borrow money from a private lender and it was cheap, and you could arbitrage that and borrow it at one rate and invest it at a higher rate. Those are the same philosophies and principles we're talking about. But in our case, we're really, the cheapest money right now is the banks. The banks have really cheap money, and they got to lend it out. So 1-to-1 leverage, not very good, because you've got no leverage, no arbitrage. Let's say you've got a $100,000 property. It's going to be the same in all of our examples. $100,000 property. The property is going to say the same in all of our examples. In this case, we're going to do $50,000 of financing, $50,000 of cash. We've got 1 part our money to 2 parts property. Okay? So this is going to be 2 parts property to 1 part our money. It's 2-to-1 leverage. We used our money to buy twice as much property. Okay? Here is, let's say we're getting 80% financing, which is what most conventional real estate investment purchases are 20 or 25% down. So if you've got $20,000 of your own money and 80 parts the bank's money, you're able to buy 5 parts property with 1 part your money. So here's your money, here's the property, and you've got 5 parts property for your investment. And another way to look at it is you just take the amount of property divided by the amount of cash you've invested. That's your leverage ratio. Okay, so leverage ratio. Let's say you could get $95,000 of financing, and it's possible. When you hang in there long enough with our organization, we'll show you how you get 95% financing at very inexpensive interest rates. And you've got $5,000 of cash invested. You've got 20 parts property for 1 part your money. So before you go on in this video, I want to make sure you really understand leverage ratio. Leverage ratio is a key factor in hassle-free cash flow investing, and not a lot of people teach it. So make sure that you've got this leverage ratio concept down before we move on. And it's basically the amount of property that you purchased divided by the amount of cash you have invested in the deal, or the amount of your down payment is the leverage ratio. Okay? The 1 always represents your money. The bigger number always represents the property, how much the property is worth relative to the amount of cash you invested. Leverage ratio. Next, we're going to talk about how to use that leverage ratio to make good decisions.
Help me go to HassleFreeCashflowInvesting.com.